And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, futures family. It's time for the market prep. Thursday, February the 9th. God, this week is just flying by. My name is John Hoagland. Thanks for trusting me with your time. And as always, if you're in the markets, hopefully things are going your way. Our focus here is on accurate context, good risk management, and always remaining patient in our trading. Jobless claims out this morning at 7:30. If there was a knee jerk, I would say it was to the upside in the equities, but not a major reaction to these numbers, although jobless claims were higher than expected here early in February. The initial jobless claims, they were expecting 190,000, came out 196,000. Continuing jobless claims also higher by about 30,000. We're still waiting for the natural gas numbers due out at 9:30. I don't see any talking feds or anything really that's going to be impactful on the markets except for a couple of short-term bill and bond announcements and auctions. The 30-year bond auction is at noon today, so may want to be keeping an eye on that. As far as everything else is concerned, we've got stocks firming up overnight. A lot of economists blaming some decent earnings. Disney was higher yesterday. We've got PepsiCo also higher. Still seems to be waiting for more information, though. The equities, stocks, S&Ps, Nasdaq, really kind of range-bound all week. Was looking for more information than I've been getting from the equities as far as directional activity. But again, we've got 2 days left this week in order to find out some more of that information. Today's earnings, AbbVie, PepsiCo beat on both. Philip Morris mixed, but they killed it on revenues. Hilton higher on both, Toyota higher on both. This afternoon, we're waiting for PayPal, Motorola, and the Uber competitor Lyft all due out after the close. Another long list, however, of earnings due out today. Crude prices are lower this morning for the first time in a little while, kind of getting close to an important level. We'll see that on the charts here very shortly. The VIX down a little bit, just under 20 at 1933. Dollar index down about 0.5% this morning. Last I checked, 102.68. And the yield on the 10-year also lower this morning, 3.58%. Make sure you hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome here on the Market Prep. And make sure you subscribe to our YouTube channel so you get notifications when we do go live. Today is Thursday. It is Make Hoag Money, the early session. Let me get the link up here for everybody. So if you'd like to join us on the Zoom meeting and have the ability to vote on these trades, we'll have that ability. Here is the link for this morning's Make Hoag Money. Look forward to seeing you there. Here it is. And we're all set. So good morning, everybody. George, first in the room this morning, winning the prize. Saying good morning to Lacey, the center of the universe. It has been raining here all day, all night long. I'm afraid that my house is going to sink into the swamp. The backyard is a quagmire, and Lacey doesn't like that. She doesn't like to get her paws dirty, so she was tiptoeing around the yard today, trying to take care of some business. We were both out there. We both came in soaking wet, so she's warming herself on my feet as we speak, and she says good morning to everyone. Rooster crowing, good morning, Rooster. Caprice, Charles, Terry King, Khalid, Daryl Miller. Good to see everyone. Fred. Yeah, the S&P certainly still seems to be trying to find some sort of acceptance, or how about some rejection above or below that December high. We've been seeing that the market has been struggling to hold rallies. We're getting, pretty close to the upper extreme of a potential bull flag. We're going to see that in the charts here. Good morning, my brother Rick. Love you. Looking forward to chatting on Make Hogue Money if you have the time this morning. Caesar, good morning. Urban Cowboy. I haven't seen that name, I don't think, before. Good morning. It's good to see you. Glad you're with us. Jason, glad you're with us too. Kevin, it's good to see you. Yeah, it doesn't seem Bills are ready to give up the ghost here just yet. And maybe we'll get some more information. I've been looking forward to that this week and haven't really been able to get much as far as directional information out of these markets. But we'll see today and tomorrow. Good morning, Dan Trader, Sarah Hall. Prayers and love to you as well. Spencer Rhodes, Anissa, Dylan, Dr. VJ, Kevin, good morning. Marcelo Shaw, good morning. It's okay. You're not late. Don't worry. I won't give you a tardy slip and make you clean the erasers. That's my brother's job. Bill Phillips, good morning. Dylan, 8-Ball keeps saying, ask again later. How do we interpret that? That seems to be what the equities have been telling us all week. Well, I don't know what we're going to do yet. Ask again later. Trading Research, good morning. Andy Bleed, Varga, Rob T, Travis, good morning. JT, and good morning, Lacey from Sarah Hall. Lacey is drying off on my feet as we speak. I don't think she's in the mood to come up here and say hello. Good morning, Sujit. All right. Again, Make Hogue Money this afternoon. No reflection. It's Thursday. We will be having the podcast today at 3 o'clock. Looking forward to seeing the boys, Dan and Jack, see what they have to say about trading today, and then tomorrow morning we'll have the forecast, or I should say the prep, the market prep, and we will. That'll be it for the week. This week has just absolutely flown by. It's been kind of a busy week as far as outside of trading. I haven't seen great opportunity in the S&Ps, although there have been some decent daytime frame opportunities. We're going to see what we can see today. Remember, we're always focused on context. Context is important for any time frame trader, and I think it's especially important for the day trader. We're not in trades long enough to really see huge moves, but I think it's important to have an understanding of when the market is in a huge move. And right now, it's not. It's range bound, but that can change. We're going to check that out in the charts. Right now, here's the daily in the S&Ps. All right. So yesterday on the recap, or I should say the reflection, I think I remember saying if we don't lose open interest in the S&Ps yesterday, I would eat my hat. I don't have to. We lost 16,000 estimated open interest. Still got to prove it right when the final numbers come out. But we see that we are in an area of balance. 1, 2, 3, 4 days of balance. It's probably because I was looking for new information, new direction, and directional activity today or this week that the market has not yet provided that. The market loves to make a liar out of me. We've got lower open interest the better part of the week. Today is going to be the fourth day. Yesterday is going to be the fourth day in a row that we lost open interest. So we've lost open interest pretty much all week long, including Friday, Monday, Tuesday, Wednesday, all of those losing open interest. In other words, the market is range bound. We are looking for new business to make this market go one way or another. And we may see that again today, tomorrow, maybe next week. I don't know. We don't know how long this balance is going to remain. Balance breakout rules apply in this. Here's the 30-minute chart. We'll get a closer idea of where our extremes are in this potential bull flag. 1, 2, maybe 3 points of contact on this trend line. 1, 2 here, really just showing we've got lower volume, dropping open interest, some smaller ranges, maybe not on Tuesday here, but that was, Powell and the State of the Union days. So this Powell just made things. But we're still kind of in a range, kind of a falling range, kind of a bull flag type of situation. We know prices come up here, lower volume, smaller ranges overall, and a move in the opposite direction. So if we get a chance to take a look at this market up at this upper trend line, I'll be very interested to see how this market responds up there. We've got a long way to go before we get back down to the lower extreme of this potential bull flag. So we're a long way from breaking it to the downside, closer to breaking it to the upside. What are we looking at on the 30-minute chart here? Settlement is down here, 41.30.50. Put that on your charts. We've got overnight inventory to the long side. We've got employment information where we've got an increase in people going into unemployment. So that's a kind of a contrary picture to what we saw the end of the week last week with the unemployment rate and the big jump in non-farm payrolls. A little contrary information. Look at the market. It's liking that. I think the market, investors, traders alike, are thinking if we can kind of crush the exuberance of last Friday's unemployment numbers, maybe that'll cause the Fed to slow down rate hikes again. So we're seeing this market looking towards the overnight high and maybe getting a chance to see an opportunity at this upper trend line. So if we break out and accept above that, that's going to be a market state break, right? We've got a potential bull flag. If we accept above this trend line, that kind of marks acceptance of price above the bull flag and a potential continuation to the upside. But while we are inside here, the balance rules apply. We fade extremes. We sell the high, we buy the low. Upon acceptance above this trend line, then I think we start to look to go the other direction. So this trend line is going to offer opportunity, I think, to limit risk if we even get there today. Take a look at the TPO chart from yesterday. Oh, one more thing on the 30-minute chart. I have noticed in my experience on this 30-minute chart, we have the 50, the 100, and the 200 session moving average all within 10 points of each other. I call this the braiding of the simple moving averages. Everybody seems to have the 50, the 100, and the 200 session moving average. I've always had those on my charts, and I've noticed when they are braiding like this, I tend to get chopped up. Last time they were braided like this was over here. And this was an overnight situation. I probably, if was trading overnight, I probably would have gotten chopped up there. They're braiding right now. If we continue to stay in this range, they're going to continue to stay braided, and it's going to keep me on my heels because I've been chopped up so many times when I see these moving averages. Again, I call them braiding. I don't know if there's a technical term for it. I'm using that as an industry term. The moving averages are braided. So we're away from them now. I'm going to be focusing overnight high in this trend line. Or if we do get that opportunity, I will look for an execution. If we hold the overnight high as resistance, that might be an opportunity for us. Remember, we do have a lot of overnight longs in this market. These are weaker hands, short time frame pea shooters like me that traded all night long, buying this market, pushing it higher, pushing it higher. We know there's an accumulation of longs in short time frame, and they are looking for new business and as the market opens up. At 8:30, we'll be in Make Hogue Money. We're going to take a look and see what kind of opportunities we can find. But we know all these overnight longs are hoping that they're going to see new buyers come into the market in the regular trading hour session when everybody is available to affect the market, including the longer time frame. All right, now let's take a look at this 20-minute, at this TPO chart. So we were looking at this on the reflection yesterday. And as you know, this is a B shape. This is long liquidation. It's a long liquidation shape. And I said, if we don't lose open interest tomorrow, if we don't show that we lost interest in open interest yesterday, today, I will eat my hat. I'm not going to have to eat my hat. I'm glad. I like it where it is. It's on my head. So we do have a little bit of excess at the low. We do have the initial balance at the high here. And we are kind of largely inside the range from yesterday, definitely from the day before. We've done a lot of repair in this profile here yesterday. Relatively prominent point of control. We got 9 TPOs wide here. Normal variation, extreme day. The points of control are in the lower half or even the lower quarter of the profile. A long liquidation takes selling power out of the marketplace. Keep that in mind as well. Take a look at the overnight profiles here. You have weak high in the overnight profile, excess at the low, a weak high. What's it all mean? Look at crude oil. Finally, we're getting a little bit of a break. 3 straight up days here. China demand being blamed for that. Open interest continues to increase now, adding an estimated 4,300 yesterday. If you remember, we've got only 3 days since the beginning of the year. The 7th was a drop in open interest, short covering. We saw buyers come back into the market yesterday with an increase in open interest. And we're starting to get a little bit expensive here. This weekly kickoff high, 79.30, I think is going to be an important level to pay attention if we do approach that today. Here's the 30-minute chart. We've got some overnight inventory to the short side, recent shorts. The market has just opened. We're opening at the bottom of value. The market has been moving higher. Value has been moving higher. Points of control have been moving higher. Settlements have been moving higher for 3 straight days. We're just seeing a bit of a pullback here. The overnight low, relatively close to value low from yesterday. I'm kind of liking the idea of risking the overnight low for a potential long. Remember, we've got a lot of overnight shorts, recent overnight shorts. If they get nervous, man, they can snap the market right back to settlement, point of control, value high, the high from yesterday. You think this is a target-rich environment up here? You think there's a lot of eyeballs looking at the market up here? I would say that is probably a truth. Yesterday we opened, we closed the gap. The gap ended up being supportive, and we closed on the high of the day yesterday. Take a look at the TPO chart. Okay. Where are we? We're right in the middle of range. We're right in the middle of value, suggesting we try and stay patient. It's a normal variation day. Neither the high nor the low is the high or the low of the initial balance. Normal variation, neutral day, point of control right in the middle, balance. Not necessarily an even bell curve though, but a normal variation day, neutral nonetheless. Be patient today. Be patient. I'm looking for better trade locations in crude than we see right now. Here's the Nasdaq. Fred, I see your question. And it could have gotten too short yesterday in ranging markets. Jim Dalton talks about inventory going from too short to too long sometimes. And that's exactly what happens. This is the Nasdaq. So when we do fall into range, the longer time frame tends to just wait on the sidelines unless they've got an execution, which they usually do on a daily basis. They have some sort of an execution, but they're probably not doing much as long as we stay as long as we remain range bound. So what happens is as the auction moves lower as it did yesterday, we lose open interest, but we also lose selling power in the loss of in the selling the liquidation of longs. That takes selling power away from the market, and we also have a tendency to have the 90% of traders that aren't going to make money. They're looking for the breakout all the time. We get near the low, they're selling, and they end up too short. And when they end up too short, the opposite tends to happen. Without new business to the downside, those new shorts that occurred yesterday in the S&P and the Nasdaq end up too short, and then they run it the other direction. And yes, we see the bull flag in the S&Ps. We see it here in the Nasdaq as well. So we've come up to this area. We've seen volume. Hey, what are you doing? We've seen volume maintain or fall off a little bit up here. So we're not attracting volume. We're not really attracting open interest. We lost open interest in the Nasdaq yesterday of about 2,000. Not tremendous, but the market is just kind of waiting for information here. I said we were going to get some information about these equities markets this week, and well, maybe we've got the information we were looking at. They're range bound right now. So back to the 30-minute here on the Nasdaq. We do have a bull flag. Look at the overnight inventory. Again, very long, very close to this inflection level here. That's this trend line. We actually have more, I think, points of contact or frequency on this trend line in the Nasdaq than we do in the S&Ps. 1, 2, 3 points of contact. So again, this is going to be kind of a critical area. If we accept above this trend line, that's going to break the bull flag to the upside. So I'm going to be patient. I'm going to see if we get an opportunity up here near this trend line. And again, we've got a long way to go before we can actually break this bull flag from its formation. I've been struggling to figure out where I want to put this trend line. Does it go here? We got a couple of points of contact there. Do we go to here again? It's expanding if we put it all the way down there. Yesterday, we didn't put in a new low. We had an inside day yesterday. Take a look at the TPO chart. Double distribution. B shape, long liquidation, supported by open interest. Oh. The moving averages. Braided. Careful. If we remain range bound, I've been chopped to ribbons when these things happen. So B-shape yesterday, day before yesterday. B-shaped loss of open interest yesterday. Selling power is being taken away from the market when we liquidate longs. We got too short yesterday. What Fred is saying may be playing out for us right now in our 30-minute. Look at the overnight, another double distribution. It's a shadow of what we did yesterday. We got a poor high here. I'm looking forward to seeing that upper extreme of that potential bull flag. We have a potential bear flag here in gold. We got price moving up, a nice pullback. Look at the small ranges here. Look at the low volume. If this thing breaks to the downside, it's gonna get ugly. One big caveat to that: the dollar is on its patoot today. It's on its lows as we speak. 102.65 is where I'm seeing it. That's probably a delayed quote, but it's giving the euro and the gold a nice boost. But is it enough? Look at where we are. Oh, oh. Range rules rule in this case. 1, 2, 3, 4, 5 points of contact, 6 points of contact, 7 points of contact. When we get to these extremes, we fade them until there's a breakout that shows acceptance, then we go with it. This is a bear flag. This resistance should be pretty solid. Look at that opportunity here this morning. Oh my God, I can't believe I missed this. I'm going to cry. No, I'm not going to cry. I've missed better trades than this. I've been kicked out of better bars than this. So that was a nice opportunity. Oh my goodness. I'm hoping somebody here saw that. Here's the TPO chart. Yesterday, normal variation, upper extreme, yes, of the initial balance. Normal variation, central, neutral day, wide profile, TPO profile for gold. Price is moving away. It's what happens. How far did it get? How far is it going to get? So we've got maybe some decision off of this weekly kickoff low that has been so magnetic in the euro, with a little help, of course, from the US dollar. What did we do yesterday in the euro? We added 1,600 in open interest on just a weird, kind of strange, very narrow day. The US dollar has sunk now to off its monthly high. Decision at this weekly level. Open interest creeps higher. Take a look at the 30. Dag nabbit. So we've got this gap, which I've kind of pointed out with this shadow on this chart. There's also more visuals above for us to look for. Look at how close this market stayed to this weekly kickoff level. Settlement here, settlement here, settlement at it yesterday. Finally, we're starting to see some movement away from this area. As far as I'm concerned, we're really long in overnight inventory. If we can't fill this gap and we break down below, that's going to be important information. If we can't fill this gap, we're already there. Take a look at the TPO chart. Gap, look at this narrow, just very even bell curve, central point of control. This is the using up of the ability for the market to facilitate trade. Price goes looking for new levels to facilitate trade. It's a very prominent point of control. This is going to come into play on the way back down. Here's that gap we're trying to fill. 10-year. Well, I'm kind of lollygagging. I got to get moving here. We got to make money here today. So yesterday we added 41,000 in open interest on an up day. Volume was pretty low, though. I would say that this was a relatively weak pullback. Even with the increase in open interest, it's 41,000. Isn't that huge in the 10-year? But the volume is what says that this little pullback here is looking a little bit hollow. I could see us going back to the daily chart, seeing a pullback back to weekly kickoff low, and then perhaps a continuation to the downside with no reacceptance of price above that weekly kickoff low. We've got another gap there with a naked point of control between us. Weekly kickoff low is right in that area. Overnight inventory to the long side. Putting in a new high at the 730 bar, but unable to so far continue. Overnight again inventory to the long side. If we don't continue the move to the upside, they're probably likely to be a contrary auction to the overnight upside auction here. Here's the TPO chart. So we finally have a little bit of excess at the low here. I wouldn't call it strong excess, but it's excess nonetheless. This market has such a tendency to leave weak highs, weak lows all over the place. We got a weak high up here. The market could certainly come back up and recheck this level. We've got naked points of control, a go-go above the market within reach. Nothing really below. So I could see this market coming back to kind of that 114 level. Check this point of control, get into the gap, fail closing the gap, and then add back lower. I don't know. Take a look at the natural gas now. So we found buyers for a couple of days. We found sellers yesterday. 5,700 increase in open interest on this trend day to the downside. Volume was pretty decent. Our last week's low, the lower extreme, very pivotal area there. Very pivotal area. Take a look at the 30. So here's last week's low. A relatively feeble attempt to continue this move to the upside. We did see some open interest, some decent volume on this day. Yesterday is a trend day to the downside, leaves a poor low. We've looked below it in the overnight. We haven't necessarily looked at it in the regular trading hour session, and we're inside value. That's going to tell me, all right, be patient, wait for the initial balance to establish, focus on the extremes of the initial balance, and if we get down to this level here, I will certainly be peaked and thinking, okay, maybe something worthwhile is going to come from this area down here. Here's that TPO chart showing the week low from yesterday. Week low exact to this low, last week's low right in the area. Double distribution trend day to the downside, a pretty solid move. Upper extreme of the initial balance is the high of the session. Couple of little anomalies kind of up here. We got single TPOs here we're up against. That may provide a degree of resistance. But again, because we're in range and in value, I'm going to try and stay patient. All right, so we're going to move pretty quickly on to make Hogue money here this morning. Take your deep breath, traders. Stay humble, grateful, creative, and centered in your trading today. Looking forward to seeing everybody for Make Hogue Money. If not, have a great trading day. Get out there and profit. Make sure you are good to yourselves. Be kind to others. Say a prayer for peace. Blessings, and I'll see you in just a few minutes if you're going to join me for, again, Make Hogue Money. Have a great trading day.